Hey folks, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Monday, December 2nd. We're going to take a look at SOFI today. So SOFI dropped a little over 3% today, and I wanted to come in and check the levels. I had added a few levels over the weekend. These are the, top blue ones that you see here. I think 1752 may have been as high as I went. Yep. But I was going to put out a video for this on Sunday, yesterday, but I just didn't get to it. So in any case, these are the levels that I put in over the weekend and sort of held pretty true today. So nearest in levels that I have, support level 1548, resistance level 1649. If it can get some motion above 1649, as you see, it's topped out in that range the last two trading days, Friday and today. But if it can get legs over that 1752. Now, before I go through additional levels, I want to address the question of, am I concerned about a major SOFI sell-off? Not just yet. And I'm only speaking from a chart perspective. I can't speak for any sort of analysis that people are doing or sentiment around fundamentals or catalysts that might pop up that are just sort of unknown or unforeseen, or macro forces, right? If the entire market in and of itself has a dip, a sell-off, a correction, whatever sort of manifestation it may take, how that may or may not impact SOFI, I don't know. But just purely based on the chart that I'm looking at, I'm not concerned at the moment. Do I love losing a little over 3% on my position in a day? No, of course not. But here's what I'm looking at. My more bullish instincts would hope that 1548 holds if it does come down there. As it stands, we had a low on this day. So this was now 3 trading days ago. A low on this day of 1525. The next day, the low was 1557. Then on Friday, the low was 1617, and now today, 1574. So what this says to me is there's a little bit of an uptrend support holding here in the very, very, very most recent trading days. So I would look for that to sort of persist. And if we do need to come down and kind of have this double bottom at 1548 and then make another attempt at 1649, I feel okay with that. If we dip below 1548, and by dip below, I don't just mean that it kind of does this, a little bit above, a little bit below, but I mean if it comes down and it's clearly in this zone, right, it's out of the range of like readily touching 1548, then I get a little bit more concerned. And I don't know exactly how I would react to this in the moment, but if it does dip down into this range here, between this 1548 and this 1443, my question is going to be, do I want to consider stomaching a hold to see if 1443 holds? Or do I want to trim? Do I want to sell off? Like sell out and look for a reposition? I don't know exactly yet. But if I could stomach it, or if I decide to stomach it, 1443 is absolutely what I would want to hold. Now I know this previous hold at 1356 does look nice and compelling, but the issue that I would have would be 1443 is where we had this double top that it broke through. And that's when it made this move all the way up to 1661. So if it breaks that 1443, where it previously had double topped and then broke through, that's where I would be concerned that maybe even a dip then, if it loses 1443, a dip to 1356 may not be progressively held. I may want to put those back on, but let me just check the EMA situation. So we are talking about 1443? Yeah, 1443. So right now this, 21, the mid-short range EMA 21 at 1411. So that's going to continue to draw upward for the time being, I would suspect. It may sort of get into position around that 1448. I don't know. But that would give me further sort of allegiance, if you will, to want to see that hold. But right now, it's been on such a tear, right? This is an incredibly steep rocket ship climb, right? So the idea that it's going to just be on this trajectory forever is, I think, a lunatic's endeavor, right? It's not going to happen. It wouldn't make sense. So the fact that it's dipping down, and it's not even come to the EMA 8 yet, right? That's at 1554, and the after hours low right now coming in at 1588. Like we said, the low of today was 1574. So, it still is a solid ways away from even needing that support on 8. And if it does, my bullish look would be for it to look something like this. Again, if it does need to come down to that EMA 21, to me, it doesn't scream that we've lost the bullish momentum. It just screams that this is a little bit bigger of a breath, but it may carry on. It would depend what it was going to do when it interacts with that EMA 21. So I can't talk about a hypothetical chart situation until we get there, right? I don't know what it's going to look like when it approaches the 21, when it makes contact with it, what it's going to do. So, the first things first, it hasn't even touched the 8 yet. So I would hold off on worrying too much about the other stuff until I see that. If we look at the volume positioning here, a pretty good base here, right about where it wicked off today, and then coming into alignment here all the way down to, below 1550, and then we do have a bit of a fall off there, and maybe some thin action until we get a bit lower into the area that I was talking about here, right? This previous double top, it puts us in alignment with these growing volume shelves. So something that's, we could consider if it even comes into play. We don't know how this is even going to react at the moment. Like I said, my druthers, if I were to have them, 1548 holds, and it moves off of that. And it doesn't have to do anything fancy. It could even just consolidate sideways for a while. It could even wrestle with that level for a while and dip a little bit above, a little bit below, a little bit above, a little bit below, and then sort of make its move from there. I would feel generally okay with that. But like I said, am I thrilled about losing over 3% today? No. Do I feel like it's the end of the world? No. Not yet. Now, a few things happening. So now we're in the December ATR levels phase, right? And these are fresh off the books, fresh off the press, hot off the press. But the mid-range here is situated at about, I don't know, what is this, 1640-ish? And today, catching support right off of that put trigger. So the put trigger on this ATR set up at 1573. If it does dip below the put trigger and follows all the way through, right now that has it dipping down to 1353. So I don't know if that would happen, but right now that put trigger is holding as support. Now, if it is able to gain motion at the call trigger, that's all the way up at 1709. So, a bit ways away from working off of the 1649, which is what we're first sort of looking for and hoping for. And then I have 1752 on here. So if it gains that motion, right, toward that 1752, then we would be over that call trigger at 1709. That puts it, if it stretches the full +1 ATR through the month of December, puts it at 1929. I don't know how sort of rickety or skittish folks are going to get around like psychological levels like $17.50, $18, $20. That might get quite interesting, especially if we are sort of devoid of a SOFI specific catalyst. I don't necessarily think like a macro catalyst would do it at that point. I think we would sort of need something more SOFI specific, but that's just my 2 cents. Now, the TTM squeeze indicator here, this oscillator is a little bit all over the map at the moment, right? We have building bullish momentum and then peeling back a little bit, building, and then peeling back a little bit today. So it's kind of getting a little bit weathered, maybe. And then on the phase oscillator down here in green, right now 105.52 is where it's situated. So on the higher side of things, but of course it would be on the higher side of things. It's outside of the channel. It's been that way for like a month and a half or so, more or less. I know it's dipped into there a couple of times, but spent the vast majority of its time out of the upper bound of the channel. So just a wildly impressive motion, wildly impressive move. And, but I am keen and curious to see what happens, and keeping my eye on this setup at that put trigger to see if that holds as support. If it doesn't, what the motion looks like there. It can, I don't know if I'm going to have a good example here, but it can certainly sort of wrestle with that level, but then not. Yeah, maybe this one, it's a little hard to see. No, that's not a good yeah, I don't have a good example here. So, but it's just to say, just because it sort of dips below there, it doesn't mean that it has to like plummet, right? It could sort of wrestle with it a little bit and regain support over it, and then kind of move in motion toward the mid ATR level, or the baseline ATR level. To me, that wouldn't feel like the greatest bullish potential, right? I would be a little bit, keen to look for an exit probably if that were to be the case, but just because it dips below that put trigger doesn't mean it has to plummet, but it wouldn't give me a ton of confidence that we can continue this in a way that I want to hold through. Again, my position was always meant to be a swing position. I've already held it for way longer than I thought I would, but obviously with a move like this, it's been well worth it. But I've had this position for months and months and months and months, have built it over months and months and months, sort of adding in at places that I felt made sense. So, it's up a lot. And so if I need to lock in those gains and then look for another good entry, I'm more than happy to do that, especially if we get something, compressing and then something working on the TTM squeeze indicator here. That said, it triggered and fired a few times over here and nothing at all happened. And then when something actually did happen, it didn't get any trigger and fire. So who knows? I mean, there's a lot of things to look at. You have to sort of pick and choose per stock is how I do it on what I think sort of historically has made sense for that ticker. But baseline, I look at these levels, I scope the ATR levels, and then pay attention to the EMAs to see what it does when it interacts with them, right? Like wicking up strong off of making contact with the 21 EMA, really good indicator that there's more bullish momentum to be exhausted there, because it just got bought right up as soon as it made contact with it, right on that candle right there. So, something like that is what I'm talking about. And you can't necessarily say, oh, if it wicks up really hard, as soon as it hits that, then, we're going to be in good shape, because you don't know exactly what the approach looks like. You don't know what the follow through looks like. And if you do go through that process of, if it wicks up hard when it makes contact with that 21 EMA, then you're in the you're in the world of, now I have to talk about the other 35 things that it could do when it makes contact with it, and what that could or couldn't mean. So that's why I try to not get too crazy about that until something is more tight in to making contact with the level, and we sort of see what that approach could really look like. So those are my 2 cents at the moment. But yeah, to me, 1548. 1443 of my most keen interest for the time being, if we continue to get dippy. If we get some stability, some legs back underneath us, 1649 has all of my eyeballs on it. All right, folks, so I hope that your trading week is off to a good start, and as always, I appreciate you watching, and I will see you in the next video.